Hey, this is Joe Rapisardo over at Pacific Community Lender. Today I want to go over with you some different options of why you would possibly want to look to refinance your house when you already have a mortgage. So a lot of people don't know that when you have a mortgage, you have a financial tool that you can use for the rest of your life in different ways. It's not just to have a house and to have appreciation, but there's also a financial tool to help you in other ways. So let's talk about some of those different ways. When you refinance your house, you can, for number one, is you can lower the interest rate with a lower interest rate. And that's what most people think when they're going through refinancing. Should I refinance? How much money am I going to save? And when I do that, I do a free estimate for everyone. What you want to do is to see what the total costs are of that refinance, and you divide that by the savings, the monthly savings, and that'll tell you how many months it'll take to recoup your costs. You usually want to have that done within 2 to 3 years, so 24 to 36 months is what you want your recapture period, or recoup your cost to be. Another option of doing it is to consolidate debt. So a lot of times when you get equity in your house, you can take cash out to pay off debt, or to get a second, or to get a pool, or do something else like that. So a lot of times what we'll do is we'll take a look at your credit report and all your monthly bills, and you'll take a look at your mortgage plus all the bills that you want to pay off, and we'll add that up. And let's say that's $3,000 a month, the mortgage plus all the bills. And then we refinance, sometimes even to a higher interest rate than you currently have. But by consolidating all that debt into a 30-year mortgage, a lot of times you can save hundreds and sometimes even thousands of dollars a month. There's been multiple people this year that I've saved over $2,000 a month by consolidating their debt. And so you can either enjoy that savings, take that money and enjoy that and just have $1,000 more to spend, or as I like to do, and I've done on my own house, is you can take that savings and then apply it to your principal. And if you pay down that principal, I have tools where I can show you a lot of times you can rapidly pay down your mortgage. And if you use that way and you don't charge the debt up again, you can pay that mortgage off in 15, 20 years, and sometimes even sooner. So it's called mortgage planning, and I do that for all my clients for you. Another way is doing possibly restructuring the loan and going with a shorter term. So let's say you have a 30 years and you've had 4 years on it already, so you have 26 years left. We refinance you to a 20-year or a 15-year, and the payments might possibly go up a little bit, a couple $100, but all of a sudden you're paying it off in 15 or 20 years. Why would you do that? Well, for one, you'd have the house paid off earlier, and the second thing is by paying it off, you're going to save a ton of money. And interest goes into the hundreds of thousands of dollars when you pay it off early. It's amazing how much the savings are. And I use it as a retirement planner for people, because I see people in retirement. Once you're in retirement, you have a fixed income, and it's not then. Once you have a fixed income and your income doesn't increase anymore, you need to know your cost, how much you have to spend every month determines the lifestyle that you expend. So if you can get rid of your mortgage by the time you're in retirement, you have a much better retirement, much better lifestyle. So what we do is we structure it. So if you do a 15-year, now let's say you're in your 40s or 50s or whatever, you get it to where you are a 15-year, you're 55 or 59 or 65 years old when you have your mortgage debt free, and that allows you to have a better retirement. So anyways, those are a couple of different options that you can do. There are other things that we can do as well. Anyways, I just want to let you know it's not just about the interest rate, it's not just about the cost, it's about the total monthly benefit that you're receiving on there. And if you're with a good loan officer, they'll be able to go over and claim these, or show you these different points and how you can benefit from them. And I do that for all my different clients. So if you want a free quote, just reach out to me. I'm happy to help you. Otherwise, I hope you're taking advantage of these times. These are the best time to refinance, the best time to purchase. These are the lowest interest rates I've seen in my career, and I've been doing this for many years. So hope to see you soon.